afternoon. You've tuned into ET now, and this is Market Fatafat with me, Shell D'Souza. Along with me, I have Winnie Motiwala. Good afternoon to you, Winnie, but not a great afternoon coming in for the markets. No doubt we are trying to make some recovery from the day's lowest point. But amongst the entire gloom in the markets, there's one stock that's holding on to the positive territory, and that is L&T Tech. If you look at the stock price of that particular counter, it's seeing an up move as much as 3% as we speak. There you go. But let's talk about why such a upbeat moves coming in on the stock today. With the management, we have Amit Chadha, who is the MD and CEO of the company. A very good afternoon to you, sir. Thank you so much for joining us on ET now, and congratulations on that latest win as well that you've got. So if you could give us a detail of the latest cybersecurity deal that you have secured, the execution timeline, the ramp-up timeline, what can we expect?
Sure. So first of all, thank you so much for having me on your show. Let me start actually by congratulating the government of Maharashtra for thinking above and beyond the current and deciding to roll out this program, and then finally the confidence they've had in choosing us, right? This program, as we see it today, is essentially setting up, first of all, architecting, implementing, and then operating a highly sophisticated cyber intelligence and digital forensic investigation center. Essentially, we're going to come in and we're going to go ahead and look at various kind of threats that exist in the market in the world today, which is stuff like deepfake detection, mobile malware forensics, IoT investigation, network forensics, object detection. So we'll take each of these and actually create a digital threat analytical command center. Coupled to this, there'll be a center of excellence that will be set up. And then we'll support a central emergency response team that will look at these incidents throughout the state of Maharashtra. I do believe that this will help in proactively threat hunting and helping and making citizens' lives more secure in Maharashtra. For this particular program, we are partnering with Palo Alto Networks. We've already announced a partnership with them. Plus, there will be tools from the IBM Toolkit and Cisco. Additional to that, we have partnered with KPMG for certain aspects of this job. Overall, a 5-year program. It should kick off today morning, and we do expect revenues to come in for this into FY24 and FY25 as well.
Right, Mr. Chadha, surely revenues will start coming in FY24-25, that we'll start seeing it. But let's talk about, are you expecting any more such deals, anything in the pipeline that one should expect?
So let me step back and take a couple of minutes in this. See, if you look at the global cybersecurity market, the global cybersecurity market today is approximately $170 billion market globally, expected to get up to about $400+ billion by 2030, right? So if you look at that size, what we've done with it is, number one, we tied up with Palo Alto that we had announced a couple of quarters ago. We signed a global deal with another company about in the last 2 quarters, and we announced that as well. This is the first large 100 million deal that we have signed with Smart World capabilities and cybersecurity for India. I do expect in my pipeline, we've got other, we don't comment on exact deal values and sizes, but there are other transactions, deals that we are talking to people on in the US, clients in Europe, as well as in India on similar offerings, if I may, that I believe can help us grow this business.
Right, Mr. Chadha, that is all about cybersecurity. Let's shift focus and let's talk about the rest of your verticals. You have plant engineering, you have high-tech transport among some of them. How are these units of yours, verticals of yours performing now?
So if I may, the transportation segment that we have has done fairly well. And, we don't comment on performance in the middle of the quarter. But we've invested in software-defined vehicles. There are new frameworks plus tie-ups that we've announced. I'm here in Bangalore, been with the team the entire week and very excited of what we've been able to create. We've launched a new electric vehicle lab that can do various kinds of testing. So transportation going strong. Plant engineering, again, with global customers. Once setting up shop in India, we are ending up doing a lot of plant engineering work for our global MNC customers for India for their plants. And that's coming out as a good uptick for us. Semiconductor is starting to look up, but the others, we need to wait a little more. And when we come back to you in April, we'll talk to you more about that.
Right, I just want to know, so this deal will add to your Q4 revenues, and does that bring you closer to achieving that FY24 guidance of yours?
Confirm that we will come in between 17.5 and 18.5, which was our annual constant currency guidance. And we are fairly comfortable at this stage with the guidance that we had given you. This deal will contribute to it as well, plus others that we've been able to sign. The pipeline is fairly healthy. We've got some other deals above 25 and $50 million that are in the pipeline. There is a couple of other 100 million deals that are in the pipeline. And we continue to work on ramping up and actively hiring as well as shoring up our utilization. Fairly comfortable at this stage.
Right, Mr. Chadha, let's talk about your margins, but your margins have been seeing a bit limited growth over the last couple of quarters. What's the outlook for the margins now that you have going ahead?
See, if you look at EBIT, we used to be above 18.5% before coming together with Smart World. And together, though the market was expecting us to come down, we actually have held our heads above that 17% mark for EBIT. We've also guided for getting back to that 18% numbers in FY26. We are on a journey, and we believe that we are making the right investments, making the right optimization to be able to take it forward.
Also let's talk about how is the BP deal ramping up actually going on? What is the update on that front?
That is on record to ramp up per the plan it was. That is a slightly slower ramp as compared to the cyber deal that we've just signed. But yes, it is on a ramp-up mode now.
Right, Mr. Chadha, and let's ask you a forward-looking statement. Is the $1.5 billion aspiration by FY25 as well as the headcount addition on track as anticipated?
We are still on track. The aspiration includes a little bit of an acquisition, and we are actively continuing to look for one. And I do believe organically FY25 will be a stronger year than FY24 as we move forward, but more to be said as we get into April.
You did speak a bit about those inorganic tuck-ins. Could you just say anything specific that you have in the pipeline on the inorganic front?
We continue to look at various things. Our focus always is first on organic growth, building our capabilities, building a differentiated solution set, which we have done here in Smart World and Cybersecurity, done in plant engineering and asset management, digital twinning and mobility. So as we move forward, we will continue to focus on organic growth, and we continue to evaluate various things in inorganic. And let's see which one, there's a reasonable one that can come across that can add to capabilities and help us in our journey, definitely.
All right, Mr. Chadha, we'll leave it there. Thank you so much for joining us in ET Now to talk about this latest deal that you've secured, also giving us a glimpse of what you're expecting for the year and the next year as well. That was the management of L&T Tech Services. But on that note, we'll slip into a break on this edition of Market Fatafat. When we come back, we'll start talking about stocks that are buzzing in trade, so don't go anywhere.
Welcome back. You're watching Market Fatafat on ET Now. Before we get started with all the stocks that are buzzing in trade, let's just mark the flashes that is out on the bottom of the screen as well right now. And what is happening right now is that the Indian government has approved the electric vehicle policy. Now this has come in, and this is actually going to have a minimum investment. They're saying for this mandates them to have 4,150 crore rupees as this minimum investment. There'll be no caps on this. They're going to be having 3 years timeline for setting up the manufacturing facilities in India and to start the commercial production of electric vehicles. Now 50% of this domestic value addition should be reached within a time period of 15 years as well, is what they're highlighting. Furthermore, they're saying that maximum 40,000 EVs at lower import rate is something that will be permissible if investments are somewhere around $800 million or more. Yes, obviously this is all coming in for the EV policy. We're going to be keeping an eye on there. There'll be more updates coming in on this one. We'll be connecting with our reporter Sameer as well. Let's wait up for that. But Cheryl, this is the latest update that we do have from the government as well.
Absolutely. Latest one, let's take a look at what Tata Motors is doing, given the fact that the other minute details that are coming in is that the company setting up manufacturing units for EVs will be allowed limited import of cars at a lower customs duty. Customs duty of 15% on knockdown EVs to apply on vehicle of minimum value of about $35,000. And customs duty of 15% to apply for 5 years, but this subject to the company setting up a manufacturing facility in India within 3 years. So take a look at Tata Motors. That's one of the companies that will be impacted, or rather will be in focus on back of this particular policy. We'll get you Samir in a short while from now. But for now, let's go on and let's talk about the stocks that are moving in trade. And we have our team of researchers and technical analysts joining us. We have Amit Chadha who's joining us on the technicals, while on the research end we have Gaurav as well as Ankita. Good afternoon to all three of you. Thank you so much for joining us. And Vinny, definitely everyone was expecting, or all the consumers were hoping, that there would be a fuel price cut. It's happened, but companies are not rejoicing.
Companies are not rejoicing, but consumers surely will rejoice on that front. But why companies are not rejoicing? So we are seeing, look at these OMCs today. Let's pull up the charts of IOC, BPCL, HPCL. All of them are down and out. Now there's not only this, there's a triple whammy that actually came in for these OMCs. Obviously, one, OMCs have now announced the petrol diesel price cut, and this is for the first time that they've announced since April 6th, 2022, and this is cut by ₹2 per litre. Other than that, Brent crude oil prices, that has surged. Today it was above $85 per barrel mark as well. So this is amongst the highest level that we've seen it since almost November. So yes, Brent crude oil price is surging. Singapore GRMs, they are trending lower sequentially as well. So keeping an eye out on that, because when you look at it for OMCs, for every 0.5 rupees per litre charge in fuel margins, usually lowers the EBITDA for these companies. Now for IOC, it's by 7%, BPCL, it's by around 8%, while HPCL, it's around 11% as well. So yes, overall, generally in terms of GRM also, which is a concern that comes in, so that impacts these OMC companies as well. And keeping an eye out on that in terms of the margins of the companies, they are impacted. And what CLSA is saying, that seems like that honeymoon period that we saw for these companies, that seems to be over, and that is what they're keeping an eye out on as well.
All right, so those are the OMCs that are reacting to that price cut, 6% downtick. But on that note, we slip into a break. When we come back, we'll talk about more stocks, so don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.